Hey everybody, welcome to another Bitcoin Intelligence show. Today we're going to go over Monday's Bitcoin Intelligence report. I'm going to begin with the executive summary. So the report is titled The Big Divergence, The Chain Cools as Macro Warms Up. Essentially, we are observing some really bullish signs in the macro environment, but signs of cooling and lack of demand in the on-chain data. So the report starts with the executive summary. If you want to access the full report, you need to sign up and subscribe to Bitcoin Intelligence platform. So the report mentions that there is a divergence, which might sound unsettling for a lot of people, but we want to highlight that the opportunity actually lies in a setup like this. The long term is really bullish. In the short term, Bitcoin is stuck in a trading range. So we're witnessing a striking divergence, short-term weakness in Bitcoin colliding with rapidly improving long-term macro backdrop. On-chain and futures activity reflect fading momentum and weak demand, yet beneath the surface inflation is cooling, the Fed is turning dovish, liquidity is building into the second half of 2025, and the macro landscape is looking more bullish than ever. Bitcoin, however, remains pinned between 100K and 115K, a range that will not last. We've been highlighting for quite several weeks that Bitcoin needs to take a break, and it has been taking a break since then, but this range will not last for much longer. This is a calm before a move, and in this divergence lies the opportunity. So let's understand what's going on here. As always, our report covers both a macro and liquidity section as well as an on-chain section. The macro segment will first look at Iran-Israel war and its likely ramifications for global energy, inflation, and central banks. We review what happened and what can happen to the energy market. We then look more deeply into the most critical maritime choke point in the global energy system, Strait of Hormuz. We examine how energy disruption could impact inflation and assess war's impact or lack thereof on our broader macro outlook. In this part, we present a very clear outlook for the second half of 2025. So we have a lot of confidence in our view about 2025. In the monetary mechanics segment, we review three critical signals from the past week worth watching. One of them is Bitcoin sold off, but not as much. It's a very controlled, very contained sell-off. And it recovered pretty quickly because it's the most liquid asset on earth. If something happens over the weekend, if the war breaks over the weekend, people sell what they can, not what they want. So Bitcoin sold off and it quickly pared back a lot of those losses. Meanwhile, long-term treasuries saw strong foreign demand despite weak dealer participation, highlighting structural strength, not dysfunction. So while a lot of people have been claiming that the bond market is going to collapse and people are not going to buy U.S. Treasuries, this 30-year bond auction showed that there is very strong demand. The bond market is going to stabilize, and it has stabilized in the last few weeks, and that's going to be very helpful and positive for equities and Bitcoin. And perhaps most importantly, the Fed's regulatory leadership signaled a potential shift that could re-engage the banking system after years of retreat. So there are important signs of a major move in the way regulators are thinking about banks and allowing them to pare back some of the regulations that really hampered the banking system after the 2008 crisis, such that the banks can now take more risks and provide much more liquidity to the economy, which is also going to be very bullish for the latter part of 2025. We also have an on-chain segment that is very rich this week, with several important signals highlighted. But overall, it shows a cool down in Bitcoin for the moment. We look at rate of capital inflow that's cooling. We look at short-term holder profits that are eroding. We look at the spot volume on central exchanges that is down, signaling a spot trader exhaustion. This is this chart showing exhaustion of traders in the centralized exchanges. We also find that implied volatility is at one of the lowest levels. which typically signals imminent rise in volatility. Open interest and funding rates are both declining. So in the futures market, we also see a decline, and leverage traders are stepping aside rather than reinforcing the existing rally. In the past few weeks, we have emphasized that Bitcoin needs to take a breather, and since then we've stayed in a range, particularly in the Wednesday report. So this would be last week's Wednesday, when Bitcoin was trading at 109. We highlighted the emerging bearish structure and identified 104 as a major support zone, as well as a few other zones lower than that, in the low 90s and high 80s. And since then, the price has declined, and it seems that we've stabilized around 105. This is as of Sunday, when we were writing the report. But the data we are looking at in on-chain data still doesn't show a meaningful return of demand, so we will likely stay in that range for some more time. Finally, on-chain data show two important price thresholds to exit this range. So from a price perspective, when are we fully confident that that the range-bound price action is complete and a new leg is beginning? That's if we move below 100K or above 115. These are derived not from technical analysis, but from on-chain data, showing that if the price moves out of these numbers, out of these thresholds, then the structure has completely changed, and we are beginning to see a new trend. A break either way would indicate end of consolidation. However, keep in mind that all this is occurring in the backdrop of liquidity ramping up. This is why our report is really unique, because it looks at both economic and monetary factors, as well as on-chain. So if you just look at on-chain, you will have a very bearish view at this point. But we also realize that the backdrop of liquidity is very, very bullish. So over time, even if the lack of demand pushes Bitcoin step by step lower, it will collide with a massive wave of liquidity that's coming in the next few months. And another leg will start exactly like the last few years, where Bitcoin does a massive spike in a short period of time, and then spends a long period consolidating or slow bleeding until another leg begins. So we're seeing everything is essentially shaping up for that kind of a move to happen here. All right, so this wraps up our executive summary. Again, if you'd like to read the full report, you need to sign up on the platform to access the report, as well as the videos and other charts and models that we have made available.